Hello guys, welcome to the Real FX YouTube channel. On this channel we focus on bringing you the most valuable free forex content. The content we bring to you is content that you are most likely to pay for somewhere else. If you are new to this YouTube channel, please like and subscribe.
Okay guys, welcome to this video. As you've seen the title, on this video we're gonna be talking about CHoCH. What is CHoCH and how does it occur? First thing, let's go ahead and try to do a line model of a CHoCH. So basically, okay, let's start by defining what a CHoCH is. A CHoCH is basically a change of character. Okay, what's going on? So a CHoCH is a change of character. So this change of character is when the market is coming from a certain direction and then we start seeing the market change the direction. Now it's changing the trend. Let's say we were in a downtrend and then all of a sudden the market gives us a signal that hey, now the market is about to be in an uptrend. For example, let's say we are in a downtrend, we are breaking lows and forming lower highs, and then the market breaks this low after breaking the low, and then the market breaks the previous high. Now this over here will be our CHoCH. Let's label that will be our change of character. So normally what we expect the market to do after is to retrace back into a point of interest. This can be either a breaker block or an order block. So to retrace back into this point of interest, and then the market should continue breaking the previous high, forming higher highs, and then higher lows. So the market should continue breaking structure and then continue to the upside. So this would be a change of character to the upside. Now we are in a bullish trend. So the same would be for the opposite. If you are in an uptrend, and then we keep continuing to make higher highs and higher lows, higher highs and higher lows, and then all of a sudden we take out the previous higher low, and then that is a signal of a change of character, and we expect the market to go back into our point of interest, either the breaker block or the order block, and then continue pushing to the downside. So let's just label this structure. This here would be our change of character. This here would be our change of character. So there are some people who prefer to also mark this part here as the change of character, because they say when a change of character is composed by two structures, the structure that was taken out before showing the continuation of a trend, and the structure that was taken out after to show that we had a change of character, but I prefer to only use this part. because to me this is still a break of structure, because sorry, we took out the previous high to form a higher high. So to me that is still a break of structure, and then I would still be looking for buying opportunities just as long as I haven't seen a change of character. So immediately when I see a change of character, this is where I would start considering to look for my selling opportunities. This is where I would consider looking for my selling opportunities. And then now I will show you what is not a CHoCH. I will show you, before we go to the chart examples, I want to show you what is not a CHoCH. Let's say we have an uptrend. We continue to make higher highs and then higher lows, higher highs and then higher lows. That's a higher high, and then we see the market do something like this, and then also comes like this. Now this is, wait, okay, let me do that again. I'm making higher highs, higher lows, higher highs, higher lows, and then we see okay, we see the market doing something like this. Now here you should never make a mistake of labeling this as a change of character. This is not a change of character. This is not a change of character, because for it to be a change of character, the market must take out the low, which will have to be the highest low, which took out the previous high. So this is not a change of character. It's like a small structure. It's like a small break structure of the internal. It's like an internal structure. Well, we'll get into internal structures on a different video. So because here it's still possible for the market to continue moving to the downside a bit, coming into a point of interest somewhere on the side. Maybe we might have an order block around here, and then see the market continuing to push all the way up. Now you're asking yourself that you saw a change of character, and then since you saw a change of character, you're probably thinking that, okay, since I saw a change of character, this here is now my point of interest. Now when the market gets there, it just violates your, maybe your point of interest, or the other block or the breaker block, and then you ask yourself, why did it violate the change of character? Well, that's because that is not a change of character. That was just an internal structure. For it to be a change of character, the previous low, if it's in an uptrend, has to be taken out. So this, for it to be a change of character, this is the low that was supposed to be taken out. So it would be moving from here all the way to the downside. Now that would be causing a change of character, and we expect to see the market push to the upside and then continue pushing towards the downside. So we start looking for the selling opportunities. So then we would label this as a change of character. We would label that as a change of character. Now let's jump into real charts and try to spot these change of characters. because they happen all the time and people will always find a way to ignore them, and then they get banned by the market.
Okay guys, welcome back to this video. And now we are gonna be dealing with the real chats. And as you can see, I'm on the USD chart, and then I wanna zoom in. Okay, let me just zoom out first. As you can see here, we have been on a downtrend. Now this is the first change of character that we can see. We've been on a downtrend. We have been on a downtrend. The market has been going up and down, up and down. Here I think here there was some sort of news, and then or continue to the downside, and then like that, and then like this. That's where we are at. And then we saw the market push to the upside, breaking the previous lower high, and then it came back a little bit somewhere to an area of interest, and then the market never looked back. From there, the market just continued to shoot up. The market just continued to shoot up, and then did some sort of retracement. Remember, when the market retraces, it doesn't just retrace to any point. There are points where the market retraces to. Okay, so it retraced to this point here, and then it continued shooting up, and even today the market is still going up, and then we still expect to see the market break that high. Okay, that went off. Let me just do it again. So here it was structure going up and down, and then here we had the last push to the downside, some change of character, and then your entry, and then push to the upside. Obviously when the market goes up, it has to go a little bit down for a retracement, because it's an inhale and then an exhale. So that is where we are at now. So here we can see, if we zoom in, this is where we would mark our change of character. I always prefer zooming out first, so that you can see the whole structure. You shouldn't just focus on one point of the structure and then say, I am ready to trade, guys. This is how people get bent in the market, because you could be buying for a short time, but in the long time the market is selling, and then maybe you overhold your sales, you overhold your buys, and then you are in profit. The next thing, you are in losses. So looking at this structure on a longer time frame, or in the zoomed out level, it gives you the advantage to know if we're in a downtrend or an uptrend. So here, as you can see, we had this push to the downside, up, down, then up, then down here, and then here we broke structure. And then when we broke structure, that was a change of character. We didn't come all the way down here to this point here, because here there's another block. If you zoom down, we didn't come to this structure here, but we ended somewhere here, and then from there we started pushing up. But if you look on a higher time frame, if you jump to where the market went, you can see that the market did come to this point of interest at a later stage, because the market went all the way up, started forming this structure here, and then eventually it came back to this part. Remember, this is our point of interest. That's why it's very important to look at the structure on a bigger scale. So it came to that point, and then it touched that point. That was our first signal that, okay, here we might experience a change of character. But you shouldn't really enter when such things happen. You should wait for another confirmation. The second confirmation was the change of character. Then the third confirmation was coming back to an area of interest, which was probably somewhere around here. So we came back to an area of interest around somewhere here, and then we started pushing up, and ever since then the market has been shooting up. And since, as you can see, on a larger scale, I would say we are in an uptrend. So since we are in an uptrend, we expect this there's a high here to be taken out. We expect this high here to be taken out. We expect that high there to be taken out. So I'm also gonna make a video about the break of structure, because I see people taking everything as a break of structure, and then there are certain rules, as just like the change of character, there are certain things that must happen for something to be called a break of structure. So I'll be making a video on that, and if you really can't wait for the video, just let me know in the comment. Let's try to spot some change of character here. Let's try to spot some change of character. Let's look at this market. As you can see here, we've been going up, pushing all the way to the upside, and then here is a change of character. It's a really clear change of character. Here we had a change of character, and then we pushed to the downside, and then to the downside again, and then this part here came to this level here, this here, if you check, it qualifies to be a breaker block. So this is the part where the market came into, but it didn't really touch it, but that part qualifies to be called a breaker block, because the market came down, pushed to the downside, and then it started shooting up, but there was a bit of consolidation here before the market shot all the way to the upside and then continued going down. So it's very important to be able to spot change of characters, because they give you the advantage to see a change in the market structure beforehand. So here we had a break of structure, and again I said I'm going to make a video about break of structure. So if you don't understand what a break of structure is, don't worry about it, I'm going to make a video. And then this was the break of structure. Now it's also important to know which part created the break of structure. In our case, this part here created this break of structure, and then this part here, the break of structure is always created by the highest point or the lowest point. So we started pushing to the upside to break. Now this is a change of character. Here we have our change of character. So these things are easy, guys. Once you see them, you can never unsee them. These things are very easy, guys. And then this here has to be our lowest point. Now someone might ask, why, if this is our lowest point, why didn't the market come all the way to this point here to reverse somewhere near it and then start shooting up? Well, it's because this part here, the market went away from it and then came back into the zone, and then the zone got mitigated, guys. Once a zone is mitigated, it's no longer going to be an area of interest. So the market went all the way up, and when market breaks structure, it's easily to catch the downward movement, because we know something. Now the market has to retrace back into the range to start pushing again to the upside. So here, as you can see, the market broke structure, and then we expected the market to come back to a level. Here we have an order block. Here. It touched the order block, and then after the order block, as you can see, it was a small structure. It touched the order block, and then it started pushing up. But this change of character, as you can see, it started pushing up to the upside, and then the market didn't take the previous high, and then it came to the downside. But when it came to the downside, it then made the lowest high, and now it continued going to the upside. So this part of the order block, the order block was valid, but it didn't hold all the way to breaking the previous high. So it failed to break the previous high, then the market came pushing again to the downside, but eventually we had a change of character, and then when we had a change of character, then the market started pushing up. So this here is a little bit of a failed order block, but if you have taken the buy here, you would have locked in some profits. This other block failed to break the high, but it did push to almost 90% of the previous range. Because basically, normally when we enter using an order block, we expect to see something like this. We expect the market, this to be our entry, and then we expect this to be our take profit. So as you can see, the market didn't reach our 100% take profit there, but it did go to something around 80% or 90% of the move. So you would have locked in profits. Or if you are not a person who just uses the trailing stop loss, you would maybe broke even on this trade. But then the market did come down, leaving this as our still as our high, and then leaving this part here still as our low. So we are still within the biggest range. This is the high, this is the low, this is our range. We are still within the range, and since we are within the range, if you don't see any break of the high or the low of the range, we don't consider those structures as change of character or break of structures. So the market started pushing to the downside, we would consider this as a change of character. And then the market came to this point here, and then the market started shooting up, made a change of character here, an internal change of character, then came back to the zone again, and then started shooting up. After that, the market never looked back. That's all for this video, and thanks for watching. Please leave a thumbs up and a comment if you enjoyed the video, and if you are new to this channel, feel encouraged to subscribe to our YouTube channel.